The government will impose an EMCO in many parts of Selangor and Kuala Lumpur starting this Saturday to July 16th. This includes localities in the districts of Petaling, Hulu Langat, Sepang, Gombak and Klang in Selangor and residential areas in Desa Pandan, Kerinci, Sentul and Wangsa Maju in Kuala Lumpur. Senior Minister Security Cluster Datuk Sri Ismail Sabri Yaakob said during these 2 weeks there will be an 8 p.m. curfew and only one household representative may leave their home to buy basic necessities within a radius of 10 kilometres. All routes will be closed and controlled by the police, and only those working in essential services, carrying out official government duties or have appointments for COVID-19 vaccinations may leave their respective areas. He said only factories producing food items, medicine and face masks will be allowed to operate during this period. Eateries and grocers may operate from 8 a.m. to 8 p.m. Airports and seaports will be operating as usual, while public transport will continue to operate at 50% capacity. According to Ismail Sabri, the Health Ministry will conduct targeted screening tests on all residents in these areas, while vaccination efforts will also be intensified. Malaysia recorded 6,988 new COVID-19 infections today, representing a 7.9% positivity rate from 88,450 people tested nationwide in the last 24 hours. 2,885 cases came from Selangor and 988 from Kuala Lumpur. Cumulative confirmed infections stand at 750,967. Digital Nasional has appointed Ericsson Malaysia to design and build the national 5G network at a total cost of 11 billion ringgit, following a rigorous tender exercise initiated in March. The 11 billion ringgit cost, which will not be borne by the government, is much lower than the previously budgeted cost of 15 billion ringgit. Ericsson will arrange financing for the supply, delivery and management of the entire 5G network. Meanwhile, Digital Nasional will securitize future cash flows from its wholesale business via sukuk programs to finance all other network operating expenditure and to repay all the vendor financing arrangements. According to Digital Nasional, the revised cost includes tower rental and fibre leasing, of which more than 60% is expected to benefit Bumiputra and other Malaysian contractors over the next 10 years. Digital Nasional Chairman Dato' Asri Hamidon said the 5G network and ecosystem is scheduled to be launched by end 2021 in Kuala Lumpur, Putrajaya and Cyberjaya. It will be deploying 5G to the rest of the country starting 2022. Vivocom International Holdings has entered into a heads-off agreement with Stratner Alternative Credit Fund for the latter to invest up to $350 million or about 1.45 billion ringgit for subscription to the Malaysian company's shares. Stratner Alternative Credit Fund is part of US-listed alternative investment group Stratner Group Corp. In a filing with the bourse, Vivocom said the agreement entails Stratner purchasing up to $350 million or in aggregate not more than 9% of the issued share capital of the company from time to time over a period of 18 months from the date of signing the definitive agreement. If such issuance of shares could cause a delisting, it said the maximum common share issuance shall first be approved by its shareholders. Vivocom and Stratner said they view this exercise as a starting point of a long-term strategic partnership to advance Vivocom's growth via merger and acquisition activities, as well as to fund its projects in construction, property development and mineral trading. It is noted that the total proposed investment far exceeds Vivocom's market capitalization of 466.82 million ringgit. For the third quarter of FY21, Vivocom posted a net profit of 655,000 ringgit and 21.89 million ringgit in revenue. There was no comparable quarter as the group changed its financial year end from December 31st to June 30th. Vivocom ended trading today 9.7% lower at 51.5 cents. Prasarana Malaysia announced changes at the top today, effective July 15th. Ex-Axiata Group bigwig Tan Sri Jamaluddin Ibrahim will be its group chairman, while Malaysia Airlines Chief Transformation Officer Muhammad Azharuddin Matsah will serve as President and CEO. The Finance Ministry unit said in a statement that their vast experience in helming large corporations and their involvement in the drafting of public policies and initiatives will help the company continue with its agenda in improving the quality of public transportation. Jamaluddin was President and Group CEO of Axiata until the end of last year. Before his 23 years in the telecommunications industry, he had spent 16 years in the ICT industry. He is currently a member of the Economic Action Council and the National Digital Economy and Fourth Industrial Revolution Council, and also chairman of QSR Brands. As for Muhammad Azharuddin, his credentials include helming the Land Public Transport Commission as CEO and serving as Pemandu's Director of Urban Public Transport for Greater Kuala Lumpur Klang Valley. He was also a Senior Vice President of Khazanah Nasional. Analytics firm IHS Markit says Malaysia's manufacturers reported a renewed downturn last month as the recent rise in COVID-19 infections and associated restrictions once again dampened demand, stymied production and disrupted supply chains. Malaysia's IHS Markit Manufacturing Purchasing Managers Index, a composite single-figure indicator of manufacturing performance, declined to 39.9 in June from 51.3 a month earlier. According to IHS Markit, output and incoming orders moderated to the greatest extent since the worst of the initial outbreak of the pandemic in April 2020. It said as stricter curbs were reintroduced, the sector lost considerable momentum at the end of the second quarter and business confidence hit the lowest reading on record. From a positive perspective, its chief business economist Chris Williamson said, the IHS Markit survey showed signs of inflationary pressures cooling quite markedly, and firms largely held on to staff in order to maintain production capacity. However, he said the concern is that future output expectations have slumped, and should such low confidence persist, companies may grow increasingly reluctant to retain employees and will instead move closer towards focusing on cutting costs.